Hello, welcome to another video here on our podcast. And during this video, we talk about how the fear of missing out can affect our strategies when it comes to investing in cryptocurrencies. So, fear of missing out, also known as FOMO, is the fear that we are missing out on something that other people are doing. And this could affect our decision strategies when it comes to cryptocurrencies, but it could also affect us in all aspects of our life. And in today's episode, we want to see how we could mitigate this bias, this that could affect how we invest into cryptocurrencies. So, look, how do you think about this thing that we are going to discuss today?
I mean, FOMO is massive in this, especially in crypto. Everybody does it. 90% do it during a Bitcoin bull run. During the parabolic phase, all the masses start streaming in, and they fear missing out on potential upside to expand their portfolio, to make more money, and they just jump into everything. Sometimes they jump into coins that they don't even know what they're jumping into, because they just follow the crowd, and this is exactly why most people get wrecked.
Yeah, it could lead to erratic behavior. Bitcoin went to $70,000 this year, and people may feel, oh, let me do something. I wasn't in cryptocurrency before, but no, they just see that Bitcoin is getting more and more traction from the different economic institution, and they say, oh, let me just get into crypto. And then as a result, they could start buying without doing their research, without really knowing exactly what is involved in this, because they might hear that even their friends maybe like making substantial gains by investing in crypto. So they also want to be in the trend. They want to catch up, but they don't do it the right way.
Yeah. I mean, I don't think we've got to that point just yet. Even though we're at 70,000 in Bitcoin, just as an example, people haven't gone into FOMO like we did 4 years ago when we went to 70,000. It's a big difference. 4 years ago, everybody was FOMOing in because it was 70K, jumping in, then they got wrecked. Right now, it's still boring. Not a lot of people in.
So you think that if someone get into Bitcoin right now, and then without even knowing anything about crypto, he buys his coin at 70, for you, the person will still be able to gain out of it?
Yeah, but it's still early at the moment. I don't think we haven't reached. I mean, you can FOMO into anything at any point, but I don't think we've reached peak FOMO in terms of hundreds of thousands, millions of people. That's when everybody starts jumping in. That's when you hit that peak FOMO. So right now, even though we're back at the prices were 4 years ago, and everybody were FOMOing 4 years ago, right now, it's funny how there's, again, psychology of the market. People are bored because we've been going between 50 to 70,000 the past 6 months. So there's not that many people in the space at this moment compared to 4 years ago when it was at 70,000.
But sometimes it could also be FOMO, but also for other coins. For instance, like one.
I'm just talking about Bitcoin.
Yeah. Well, for instance, when this year, Pepe was one of this coin this year that it saw its price rising sharply in a very space of time. And people may say, let me jump into buying Pepe. And then unfortunately, they may end up buying Pepe at a time when it starts crashing.
The problem is I think it was last year, it was Pepe, and at the beginning of the year. Then you had another coin that Elon Musk pumped. It was My Lady or something coin. It was an NFT. And people start jumping in. So they FOMO, so it's true. Yeah. They FOMO into those coins, especially the meme coins over the last year. But when it's mainstream and it's already big, it basically at that point it's already too late. So if you're jumping in when it's gone mainstream, most people are FOMOing in. It means when you put your money into it, then it's too late. Yeah, you've missed out.
Yeah, the problem with FOMO is that you get into it, because you hear that other people are getting into it.
So when you hear that, that's what I mean. You've missed out already.
Exactly.
As soon as you've heard it, you've missed out. You need to get it before you actually hear it.
Yeah, but
it's difficult.
Yeah, which is difficult. We are saying that it's not true for some coins like Bitcoin. I will even say that it's not true for Ethereum. I would say that for this stable coin, no matter when you get into it, you still get something out of it.
Yeah,
because the coin is stable. In the long run, you are always guaranteed to make some return upon those coins. Whereas for those volatile coins,
it's mainly the meme coins, the trash coins. When everyone is making like massive profits from it, like we see here, and then you're the person who's missing out on an opportunity. And that's what happens, especially in my experience. I've seen it a lot with meme coins and with, mainly meme coins.
Yeah, mainly meme coins. But the key takeaway of this is that when it comes to investing in crypto, you just don't want to get into it because you are hearing that people are getting into it. You want to get into it by having, we never say it enough. You want to have a well-tested strategy. You want to write down, today, I had this amount of money. I'm buying this, and I'm expecting this out of it. Or I want to hold on to it for this amount of years. For me, we never say it enough. You need to have a strategy clearly outlined and follow it. But then also, I guess you need to write down what happens if the strategy starts not to play out as you define. Like, if you say that maybe the market is moving, like other factors are playing around, you need to be able to change it as well. Because sometimes we make decisions, sometimes we get them right and good, sometimes we get them wrong, and then we need to change it. We need to be active and being able to change any decision we make. That's also something that can help us to avoid falling into this fallacy of missing out.
I think one big thing that I do before I jump into a trade on Bitcoin, or I only trade Bitcoin. It's very rare that I'll trade something else. I've done the odd XRP and Ethereum trade, mainly Bitcoin. But if I'm dollar cost averaging into altcoins, what I normally do is I check reliable news sources from all around the world, not just here in Europe, in Britain. I'll try and have a global outlook, and then I can see roughly some altcoins that probably have a potential, even with the meme coins before they explode. But to time the meme coins and coins like perfectly, you're not going to do it. But you can have a better understanding of what you're jumping into if you just check reliable sources. So that could be another way of avoiding FOMO. Avoid the stress as well of social media. I mean, social media plays a massive part. Twitter, Facebook, etc. I mean, Twitter's a big player, TikTok, even YouTube, even we're talking about crypto. People listening to this, and then there's so many YouTubers out there on giving good, even bad advice, but it can have a massive input FOMOing into crypto.
Yeah, and we want to just to remind those listening to us that whatever we say is not financial advice. We're just having this friendly chat between us, and we just want to share it here on YouTube. And again, something else can also help to avoid this FOMO as well is not to be too greedy. You have your clearly well-defined strategy, and then if maybe your assets start getting bigger and bigger, follow the plan. And maybe if you plan to withdraw part of the asset to withdraw your initial investment, do it. Because you don't want to become too greedy, because that's how you lose.
I mean, if you see a 5 to 10x in an altcoin, then maybe start thinking about converting that. Take profits, take your initial investment, maybe convert it into a top 20 coin, preferably into Bitcoin. That's what I do, not financial advice. But you want to acquire as much Bitcoin as possible, or Ethereum. Maybe don't sell everything. That was one mistake I made 4 years ago. I sold all my Decentraland. All 100% of it. I should have only sold 80%. And basically I sold way too early. But then other people, they FOMO'd in and they got wrecked because they bought it too high and then it came crashing right back down. So you can't blame yourself for lost opportunities. You're not going to get this thousands of cryptocurrencies out there. You're not going to get them all. It's impossible to jump into every. So don't covet what other people have got. Just have maybe a list of 5 to 10 different projects, DCA, take profits. Nobody got poor when you take profits. Don't be greedy, like you said. And then try to increase your knowledge of that. Whatever you're buying, if you can't explain what you're buying, then don't buy it.
That's a good advice. Yeah, but that's a good point. That's a good. If you cannot explain it, if you are not sure why you are buying it, unless you are just randomly say, okay, regardless of what happens, I just want to stick to it.
Because if you're buying it and you don't, it's because you're FOMOing into it or you're following the crowd.
Yeah, that's a good point. That's a good point. And also, as you mentioned, to also increase your knowledge about the crypto tech in general, to be able to say this project, I'm believing in it because of this, to be able to have this solid knowledge. At the beginning, it's hard to do. At the beginning, it's hard to have this solid knowledge. But as you getting more and more invested in this crypto space, it's good to also increase your knowledge. Even sometimes just to have a look at a chart. I always laugh and say that this chart, they always say, we can explain everything and say nothing else with this chart. But sometimes also good sometimes just to look at a chart and say, oh, this coin was that low before. Maybe if it's that low again, maybe I will buy it because I expect it later to come back here again. So sometimes just to be able also to explain a little bit this chart and then just to put some meaning to it. It could be wrong, but at least you increase your knowledge as you get more and more invested in this crypto space. So I think that FOMO is something to be aware of and to have some way to mitigate against this fear of missing out, because it can negatively affect our decision strategy.
Yeah, I mean, it's only human. We all feel it. I don't think anybody on the planet that's in crypto has never felt or have been pushed because of FOMO following something. But it's an interesting thought, especially going into this bull cycle, the parabolic phase. We're going to see a lot of FOMO. And for the old timers that have been in crypto, I've been in crypto for 7 years. I think yourself and other people maybe watching this, you don't want to get too overconfident as well. I don't know what you think.
Yeah, and that's a good point as well. Our decision strategy can also be biased because we become too overconfident. We may reason, because I've been in this sector for 4 years, I know the cycle by heart. We are here today, then tomorrow we'll be there.
So like in the chart that I just brought up, we could get complacent.
Yeah, we may feel like, now we are in the bear market, then what would happen after is a bull market. And what if the bear market stay that way for a very long time? What if the bear market actually is a bull market, So overconfidence also could negatively affect our decision strategy. So again, something that could also help to mitigate against the overconfidence is to keep on being up to date, discuss with others. What do you think about this? Sometimes we don't have always the same viewpoint about where the market is or where the market is going, but at least just by having this discussion between you and I can help sometimes just to have a balanced viewpoint.
Yeah, for sure. So if you're going to take anything from this video, what are the key takeaways?
If there is a key takeaway is,
number one, don't
do your own research.
Yeah.
Don't FOMO. Yeah, do your own research. And also try to increase your knowledge, because that's by doing that, it will help us to take decisions not based on feelings, but based on facts.
Exactly. And not to be overconfident. DCA is always a nice one. And don't follow the crowd.
Have your own strategy clearly defined and follow it.
And also, if you can't explain what you're buying, don't buy it.
So that's all we got for you today. We hope you enjoy this video talking about the psychology of our decision making. And don't forget to let us know in comment what you think about this video. If there are some psychology biases that you want us also to discuss in our next video, let us know in the comment, and we'll be glad to hear them. So until the next one for another video.